up. Let's welcome Paul McCulley. He's the former chief economist at PIMCO. Paul, a lot at stake here. What do you think?
First and foremost, I think Steve did a really articulate job of laying out what's happened over the last 3 days, if you will, which is in many respects a pivot. The Fed has two tools: the destination for where it's going to take the Fed funds rate and the pace at which it gets there. And essentially, it's using both tools right now in a surprise fashion. The increase in the destination is not a big surprise, but the increase in the pace to 75 tomorrow is. So I think essentially Mr. Powell is saying he's going to be nimble, but at the same time, he's going to do whatever it takes. And he's made the decision he needs to move faster to a higher destination down the road. And the markets are responding quite appropriately. And I would say he has a great deal of credibility with the markets because they're pricing in this wicket path that Steve articulated for the Fed funds rate for the next 6 months.
But has he articulated whatever it takes at this point? Because the last that we've heard has still been talk about soft landing, wanting to see, clear and convincing evidence inflation is coming down. But he hasn't outright said our number one goal right now is bringing inflation down, and here's how we're going to do that. Here's what success looks like. Here's what we want break evens to do. Here's what we want the monthly, He hasn't been that explicit yet. And is that what's missing here?
He hasn't been that explicit, but he certainly has from the standpoint of intent. Clearly, the data that we got on Friday, as well as the consumer expectations data, rattled them a bit. I'm a bit surprised because those numbers move about. But the bottom line is the Fed is where they are. I think the press conference is going to be hugely important tomorrow because he's got to balance this trade-off between moving with dispatch and satisfying, if you will, the inflation hawks, at the same time keeping alive a credible prospect for a softish landing. And three, and Steve mentioned this, and I think it's hugely important, making sure that the markets remain orderly. And I would not consider trading the last few days necessarily orderly. So I think he's got a lot of work to do tomorrow at the press conference, assuming that, in fact, they do go to 75.
Fair enough. But what you just said is actually the problem. If he talks about a soft landing or balance at all, that implies that inflation is not the predominant target. The only way to make it clear to the street that that is their number one goal is to basically say, no matter what happens, to say we have the tools in place. We've used them during COVID. We used them during the repo crisis. If we need to provide short-term liquidity, we can do it. But that we are not worried about balance per se. We are not worried about, what the unemployment rate is going to be. We're going to solve this problem first, no matter what it takes. That's what whatever it takes means.